Good morning, everyone, and welcome to this morning's live stream. It is the morning market review. It's Monday, it's the 29th of January. My name is Russell Shaw. I'm a senior market specialist at FXCM. I'm just going to go ahead and bring up our disclaimers, and we'll start off with the high-risk investment warning. Just move the camera out the way, and then you can have a read through that. I'll just keep it on screen for a few moments. All right, let's bring up the market commentaries disclaimer. Hey, Kim, good morning to you. Thank you very much for joining. Okay. Let's go ahead and bring up the first chart. Okay, and what we have here is core PCE. We have core PCE. Hey, Mia, good morning to you. Welcome. And it's coming down nicely. We're at 2.9%. Let's just put in target. Target's around about here, right? 2%. Okay, so we're moving steadily towards target. And what you can see is this is the rate of change. Okay, this is the rate of change of the PCE. Look how we are accelerating to the downside. We definitely are moving towards target. Okay, so that is the inflation outlook. That's the inflation outlook. So I'm just trying to bring up my charts. There we go. All right. So we can take out the rate of change of core PCE, and we can see core PCE moving beautifully towards target. Well, what does that mean for the real rate? And the real rate here, this is interesting. What we want to do with the real rate is still look to see if we've got this reference candle reversal. Okay, so let's just zoom in here. And we actually going to see that we've only got two of the three indications or signals. We've got a candle here that is the highest high in at least three candles. Beautiful. And then we've got a candle here that takes out the reference candle's low. That's exactly what we want to see. But we're missing the third requirement. The third requirement is that we actually need price to close below the reference candle. And we're going to just be a little bit more prudent here. And we can just we'll put the requirement now is that we want the close to be below Friday's low. And once we get that, then we've got that reference candle in, and you can see what's happening with the US dollar. Hey, Raj, good morning to you. Welcome. What's happening here is we just moving sideways with the US dollar. But what I suspect will happen is when the real rate breaks to the downside, we'll probably see some downside pressure on the greenback. And if we're seeing that downside pressure on the greenback, then we would see some support for the majors. We should see support for euro, should see support for cable, etc., etc., etc. But at the moment, we just want to see the reference candle reversal. We want to see that confirmed. And one of the big fundamental factors, which is a plus in contributing to a reference candle reversal, is the core PCE number that came out on Friday, which came in really nicely at 2.9%. With the reference candle reversal potentially in play here, let's see what's happening with the risk side of the markets. Are we risk on? Are we risk off? By and large, dollar moving sideways. Okay. However, let's just make this a richer red. Let's just make it a richer red. Okay, so it's moving, but we do have some red coming in. So money moving out of the dollar. Well, if money is moving out of the dollar as we start the week, then effectively perhaps money going in towards the risk side of the market, which would be the stock markets. Just before we take a look, we'll start off with the DAX. Let's just go through what we have to look forward to for this week. And for this week, there is a Federal Reserve policy meeting on Wednesday. There's going to be jobs data on Friday. That would be the non-farm payroll unemployment rate coming out on Friday. Okay, so those are two big items in this week's calendar. But then we're going to get a fortune of earnings as well. Okay, we're going to get a fortune of earnings. So we'll get Microsoft out, we'll get Alphabet out. Those are coming out on Tuesday, amongst others. On Wednesday, we're going to get Amazon, we're going to get Apple, we're going to get Meta. Let me just double check that. Sorry, Apple, Amazon, and Meta are scheduled for Thursday. Okay, so we're going to have some big earnings this week as well. So it's an important week. Okay, let's take a look at what's happening with the DAX. Are we moving towards risk on? If we've got that moderation in inflation, let's do a top-down analysis. Let's start off with the weekly. So we're looking at DAX, and let's start off talking about the candlesticks relative to the 30-week exponential moving average, and the 30-week exponential moving average is below the candlesticks, so that's in bullish formation. What direction is the exponential moving average? It's pointing northeast, so we do seem to have some sort of upwards momentum, upwards bias when it comes to the weekly. So we're talking sort of longer term primary trends here. It's looking pretty good. However, what I am particularly encouraged about is that we do have, on a weekly basis, a bullish reference candle reversal. So going back 2 weeks, we had a candle that had the lowest low in at least 3 candles. And then last week's candle takes out the reference candle's high. And not only does it take out, it closes above it. So we get all 3 conditions for the reference candle reversal. So we've got a bullish reference candle reversal on the DAX on a weekly basis, on a primary basis. So that's encouraging. Take a look at the RSI. The RSI is actually, it's above 50. It's actually broken this downward sloping trend line as well. Let's just put in a reference number there. Let's put in a number 1. So effectively, what's happened is that the RSI has broken a downtrend line at 1. So by and large, we're getting a longer term boost for DAX. All right, let's take a look, see what's happening to DAX on scale. And I'm sharing that tab with you. All right, so what we want to do here, let me just make sure it's logarithmic. Yeah, it is. Okay, cool. So you want to use logarithmic timescales when you're looking at longer term charts. Very important, actually. So we've got the support level that held going back sort of mid-January, and since then we have moved into zone 1. Zone 1 is our bullish zone. Zone 1 is in the upper blue, upper red area. Look at the Bollingers, they are expanding. Okay, they're expanding. So we're getting the increase in volatility as the DAX is in zone 1. That's encouraging. And what we have here is the RSI above 50. So we've got a good looking longer term weekly chart. We've got synchronization with the daily to the weekly. What about our timing? Well, what's interesting here is we're getting a little bit of red just to open the week. Well, that's, to me, that's encouraging. What's that? That's effectively the dip in the uptrend that we're looking for. We're looking for the dip in the uptrend. Remember? So we kind of got 1, 2, 2, 3. Here's the dip. That's potentially the 2, 3. And then here is the kick up. And what we want to do is we want to see if we can exploit the dip there. That's effectively what we're trying to do, right? So the fact that we are in zone 1, the fact that we've got a reference candle reversal on the weekly, all bodes well. Now we go down to the hourly chart, and let's just see if we get some sort of signal on the hourly chart is potentially going to help us. Okay, so this is DAX now on the hourly chart. And what we want to see here is it's a 2-trigger system. So we want to see the EMAs, the trend following indicators, cross positively. We want to see the green EMA cross above the orange EMA. And we would want to see the stochastic push up. We'd want to see the stochastic push up. What we can do here is we can just add the %D. Okay, let's just add %D. And effectively, we can look to see a %K cross the %D. And that would be trigger 2. So just want to don't want to predict, just want to react. So we want to see the positive crossovers in the EMA and the stochastic. And then if that stochastic can make its way through to the upper quintile, that's above 80, then we potentially got a swing on. And see what's happening on the greenback side, the dollar side, just on the hourly. Ideally, we'd want to see some money coming out of the dollar because it's a safe haven. Let's just see if that is being signaled here. So we'll just go through to the US dollar. We'll bring that up on the hourly, and you can see that we are getting a shift down here. Okay, so it does look like dollar getting sold off here. So you've got the green EMA below the orange EMA. You've got the stochastic coming down, and if the dollar stochastic makes its way down to the lower 20 and holds, then I think we may have that risk on movement. Okay, we just want to see confirmation on the DAX side. Just want to see confirmation on the DAX side. So just going back to the DAX hourly chart here. And again, I want to reiterate, don't predict, just to see if there is some sort of action here that is confirming the daily and the weekly charts. If there's any questions there, just go ahead and type those in. Any questions, go ahead, type those in. Let's just also now, if the dollar's coming down, let's just see what's happening with gold, because gold tends to have that inverse relationship with the dollar. So let's go ahead and start off with the weekly gold chart, see if there's anything worth picking up there. All right, so just sharing that tab with you. All right. Still a bit of a drift here on gold. There is there's this lower peak here, which we just got to watch out for. That's sort of that stopped the gold trend. But it is moving towards the support, and the support level here potentially is going to hold out. Raz just saying there's potential gold signals here. What I'd really like to see is the RSI breaking out to the top side. Whilst it's generally regarded as a secondary signal, just going to make this sort of lime green. It would help. So if we get a positive crossover here, and we can just put a number 1. So if the RSI crosses at 1 above this trend line, I think that's positive. It is above 50. The fact that it's above 50 showing that there is an underlying support. But I just want the I want the catalyst. I want the catalyst here to effectively kick this up. Okay, and what we can do here, Raj, is just keep an eye out for a bullish. Okay, so the candle from sort of the third candle back has the lowest low. Last week's candle is what we call an inside week, and an inside week, a candle of uncertainty. So I think the bears showing some uncertainty to the downside there. If we can get the gold price to pop, yeah, I think that would be. But the real first, I think, warning would be the RSI popping above 1 year, and then we'd want to see the reference candle reversal confirm. What we can say, despite the fact that we're not seeing the pop at the moment, it is above the 30-week exponential moving average. A 30-week exponential moving average is moving higher, and it is above 50. Perhaps we can get more information if we go down to the daily chart. So let's just take a look at gold on the daily chart, and certainly is some signs coming through here. So let's just share that screen with you. So this is gold with zone analysis, and it's moving from zone 3 into zone 2. So it's moving from the bearish area into the bullish area. Well, sorry, let me rephrase it because it's not correct. It's moving from the bearish area into the neutral area, but the fact that it's going from bearish into neutral, that's relative strength. That's relative strength forward. So we just would like to see gold close in the. Oh, let me put an arrow in there. So we want to see a close here. And what would really go a long way as well in terms of momentum would be if we cross above 50. If we cross above 50 here. So that's, and what we can line here. And take a look here. There is a movement of the RSI above this trend line. So that's positive. So let's just summarize, because I feel I haven't quite got everything in a sort of coherent sort of 1 or 2 lines. Dollar seems to be pressure to the downside. Gold seems to be pushing to the upside. And what we want to see is the momentum really take off. How are we going to see that? We're going to see RSI moving above 50. That's positive. Moving the candlestick moving from the neutral area into the bullish area. So then it's gone from zone 3 to zone 2 to zone 1. That's terrific. Mia's just saying she sees a head and shoulders resistance on the daily. Let's just go to the daily. Head and shoulders. Are you seeing the head and shoulders over here? Something like this? Or something maybe more like this. I'm just trying to see this head and shoulders. Let me go back to the weekly. All right. Can't quite see it, but let's just see if we get some upwards movement here. So that the fact that we are seeing the real rate coming down, potentially the real rate coming down. Why? Because the PCE came in lower than expected. We're going to get the Fed on Wednesday. I don't think there's going to be any rate changes on Wednesday, but the communication in terms of are we going to get a rate cut in March, that's going to be really, really important. So let's keep an eye on that. Okay, let's keep an eye on that. Let us take a look at euro. If there is some sort of breakdown in the US dollar, let's see if there's a push up in euro. Okay, Raj, see you tomorrow. All right, what I'd like to see for the breakdown in the dollar, I'd like to see a push up in euro. The fact of the matter is, euro is being very much influenced by the weakness in the economic data coming out of the euro area. We just want to see if it matches, if there's a relative weakness with a relative strength. So a relative weakness, say in the US dollar, matched with a relative strength in the euro. Not quite seeing that yet, but if we do get that dollar moving, if we do get the gold moving up, then potentially we're getting euro moving up and we're getting dollar moving down. All right, one more here. Let's take a look at. But before we go to anything else, let's take a look at euro on the hourly chart. Okay, just going to go through to euro on the hourly chart because this might be something just to keep an eye on. Okay, this is euro, and the fact of the matter is, it's not quite positioned the way I'd like it. The EMAs are pointed down, and we do have the stochastic in the lower quintile. I'd really want to see that move this way. The reason I'd want to see it move this way is I think that it would be responding to a dollar move. If it's not responding to a dollar move, then we're not getting that money out of that safe haven of the greenback, and we're losing a potential catalyst right there. So we just want to make sure that the US dollar shows signs of a movement in capital allocation. Okay, so again, just watch this dollar. It does have this is the US dollar. It does have the green. Does have the green exponential moving average below the orange exponential moving average. I need to see angle to the downside here. I need to see the stochastic move towards that lower quintile. If that doesn't happen, we're going to lose that risk on movement. And if we lose that risk on movement, is just not going to the swings in the, say, the DAX and the risk on markets just might battle a bit. All right. I think that's where we can conclude for today. If there's any questions, just go ahead and type those in. If there's any questions, just go ahead and type those in. Again, I want to see compliance. I want to see the US dollar moving down. I'd like to see support coming in for euro. All right, no comments. So let's end here, guys. I want to wish you a good day, good evening ahead, and we'll chat tomorrow morning. Thanks very much, guys.